There's just some pragmatic challenges working in the digital asset space. They run 24/7. That didn't happen really in other asset classes. And so just understanding that capability and when you cut a day and there is no downtime, right? So how you orchestrate that operationally took some time for us to figure out. The number of digits, right? So you could have 8 digits, to the right of the decimal if you're trading in Satoshis. We have billion message clients running on Validus in real time for the surveillance because it's the number of messages, and especially with the increase in especially Bitcoin's price, that just volume volatility, liquidity begets liquidity. And so you have more and more people trading. So you have huge volume spikes that are happening in these venues that we need to be able to handle. And so being able to scale to these volume spikes has been a great engineering challenge. So you have those kind of pragmatic considerations. And then it's a question of how we are utilizing our infrastructure. We started in US equities because that's the most prescriptive regulatory regime on the planet. Everything in my mind when we started is if we get US equities right, everything really is then taking it away. Every other asset class is stripping pieces out. So that's where we've spent our time then is for digital assets, what rules are applicable? And there is regulatory gray areas. For the OTC side of things, what are you doing if you're trading futures? Are you a CFTC member? How do you blend those worlds? Do you go to the most restrictive, common denominator across those two venues, or how do you balance that?